Great. Let me know if you can see my screen, and then from where on we can start. So great to have you all in this session of the DueDash Investor Lounge with Parul and Matt. Before we come, of course, to the core of the event, I want to give you a quick introduction for those of you who might not know what DueDash is all about, just that you get familiarized with that. Now, what is DueDash in the first place? DueDash is an AI-driven toolkit to really help investors and startups to connect and collaborate for better efficiency and gain, to really ensure that as a startup, you're able to create really the startup that you want to create, build relationships, get funding, and take really your data-driven story forward. Because at the end of the day, still many startups struggle with how to engage with investors, what information do they need, and how do I build that relationship step by step. So if you're raising funding, if you're looking to manage your current investors, updating them, ensuring you get funding, you should definitely sign up on DueDash. So have a look. We also do regular demo sessions on that. And of course, I can answer any questions during the session if you just send me a private message if you want to learn more about DueDash. But have a look definitely on the platform later on today. DueDash is also a toolkit, as I mentioned. So beyond our core platform, we also support you really in learning how to build an investable business, how to deal with difficult questions by investors, the kind of curveballs. So we started a course which is called the Dash to Investability, which prepares you really for fundraising, ensures that you are able to convince investors in your next meeting. And this course, as you can see, it's an interactive digital self-guided course, which you can start on education.duedash.com. And you're quite lucky because we have an Easter sale and we're offering right now until after Easter, 75% discount on the Dash to Investability course. So we're democratizing entrepreneurship here. If you really want to learn how to go about it step by step and learn really from the pros, the people who actually did it and who know how to do it, just start that course. I'm going to send you a link after I finish my introduction into the chat. So in a couple of minutes. So just click on that link and then during the checkout, add that DDE/77 promotion code. We are also supported by quite a lot of different partners, accelerators, incubators, different partners who also believe in our journey, who also think that what we are doing is very important, making sure that startups and investors have a better way to engage, collaborate, and creating the future of venture capital. And with that, just as if you have any further questions, reach out to me under my email or here in the chat. I would now give this to Parul to kind of like start the session and take it from here. Give me a second, just gonna close this and put also a focus on you.
Thank you, Michael, for a quick intro there, and very welcome to everybody. Good morning, good afternoon, good evening to everybody who's joining us. It's really great to have you in the event today. And usually we try to keep it interactive in the form that I ask questions to Matt and Matt answers, and you guys feel free to ask questions in the chat and I will take your questions and we'll try to get you the best answers that we know. And you're welcome to reach out to us even after that, whether you're a startup or an investor, we are happy to engage with everybody and please feel free to reach out to us. So Matt has a very exciting profile. He is a go-to-market specialist. He has worked with from startups to NASDAQ listed companies and has really great insights into how to build companies from early stage to the late stage growth stage companies and take them to NASDAQ as well, and how to build traction and how to go about the whole go-to-market strategy. And he's also an active angel investor. He's an investor in DueDash as well. So with that, I'll let Matt introduce himself more specifically in a better way than I did. And then we'll take the conversation forward from there.
Yeah, thanks, Parul. And you did a great job. Good afternoon, good morning, good evening. I see we got a lot of different people here from all over the world, which is exciting to see. As Parul mentioned, my name is Matt Reeves. I'm a go-to-market and business development specialist. I've been specifically focused on that for about 15 years now. And I came from the startup world. So my very first job, post university was for a company, a Dutch software company, and I was employee number 3 in the United States. So I understand a lot of the challenges that startups go through, having worked for one, but also What was most amazing about kind of my time at that company was seeing everyone wear all the different hats, the teamwork, the camaraderie, what it took to get that company to the next level and ultimately go through an acquisition, which was really positive for everybody at the company as well as our shareholders. So I'm really looking forward to the conversation today. If you have any questions, as Prul mentioned, please put them in the chat and we'll try to get to those after we're done with some of the other questions. So looking forward to talk with everybody.
So Matt, when you make investments, do you kind of focus on type of business model or a particular vertical in general?
Yeah, I would say at first, just given my tech background, that was where I was most comfortable making investments. Just, you kind of go with what you know, and that's important. But as I've grown in my career and as I've seen other businesses, I've definitely tried to expand that portfolio outside of just being in one sector. So now I've is what you see on kind of TV and CNBC and everyone talking about the next unicorn. Of course, we all want to be able to identify what that is and hopefully be able to be a part of that. But for me, sectors aren't as important anymore. I try and make it more about the team, the disruptiveness of that business, the model that it has, and then potentially, where it's going, not just in the next 2 to 5 years, but potentially the next decade.
That's great. That's awesome. So is there a particular stage within a company that's interesting for you as an angel investor? So like, a lot of investors say that you're too early, to a lot of startups. And too early could mean anything. Where is the right fitment? Like what kind of traction potentially should a startup have? Because I feel that the macro trend out there is that the cost of starting something is going lower and lower. So you, as an investor, you do have a lot of choice. There are tons of companies out there. So how do you decide who is more deserving as a candidate of your investment compared to others? And you being a go-to-market guy, I think you should be able to answer that question.
Yeah, so it's a great question because there is a lot of, we're living in a time now and of the great resignation, right? To your point, Prul, and it's a lot of people saying, I'm going to opt out of, the corporate 9 to 5 and move into starting something on my own because the cost of doing that isn't as prohibitive. Those barriers have certainly lowered, but I will also say that I don't think the success rate necessarily of companies that are able to follow through on the vision, on the model, has changed much. It's definitely still a journey. It's still very difficult to be successful as your own startup, but it's certainly not impossible. So, but to your question on who kind of garners the attention, really there's a couple of big points around when I look at things, and at what stage also does make a difference. For instance, when you and I, Prul, started talking, DueDash was at a very different stage than some of the other companies that I start talking to. If I think there's a value add that I can provide outside of just a check, something that I can provide from a go-to-market perspective, I look at that as something that I would garner more attention towards. Because for me, it's really about impact and about that next great company that can kind of potentially get launched. And if I could be a part of that, that's something that truly does fulfill me. So for me, if I feel like there's something special that I can do to help drive that company or help impact its growth and where it's going next, those are the type of companies that I get the most excited about. And again, that's regardless of sector or kind of what stage they are at in their process. Because I've certainly come across some more mature companies that I felt like that was the case. And I've also come across kind of the infant just kind of starting out that I certainly knew that there was value to be added.
Awesome. So, I mean, in DueDash, we have a 5-team model. I'm sure you remember that. So that's like we talk about timing, technology, traction, and you mentioned very rightly team, and then TAM, which is the market size. So I think as an investor, you came in as a go-to-market guy, and that's why I kind of posed that question to you. at a
Yeah.
very early stage. We were at really early. There was zero customers, not even a product, just a prototype. So
Right.
it was the impact which kind of excited you.
The,
And you kind of
exactly. And the team.
played big on the team,
Big
and
on the
then
team.
potentially the market size and
Yeah,
also the timing for the
sure.
product out
And
there. So we kind of,
the 5 T's are a great model, and it's something that I use when looking at any company, those DueDash 5 T's. I will say though, I feel like, and this is going to differ for everybody and for every investor that you talk to out there, some of the T's are just, weighted heavier than others based off of their perspective. And that's just based off of their subjectivity. So it's not, they're certainly not kind of equally weighted in my mind, but they certainly all play a role in investment decisions.
that's awesome. So what are the traits would you look at for a founder, basically? I mean, especially for the first time founders, because there could be good ones and a bad one. So how do you spot like those traits in a first time founder?
Yeah. I mean, I'll be completely honest with you. It's not a science. It's by any means. It's not something I've always been 100% right on. But you learn as you get to know people. But some of the traits that I really admire in founders are people that come from a background in the industry that they're trying to disrupt. Because they kind of understand what the status quo way is for that industry today. And then being able to say, okay, I know that this is the way that's done, but I've got basically a better mousetrap, and I've got a better process, or I've got a better brand or idea here that I think can be inserted in this. And because they come from understanding, again, the status quo and how things have been done, to now being able to have a contrarian viewpoint on it, those are the people that I feel like have a growth mindset versus a fixed mindset. And that is something I really look for in a founder, because I've read books on different things. There's kind of the visionary founder, and then there's the operator. And, most of the time you need both of those things, as you know, Parul, from doing this for as much as you've done it and the success that you've had. It's not necessarily you want to, hitch your wagon to one star. Because that team really does mean there's got to be more than one there. So the founders that I look for are people that are certainly open to the feedback, but also understand kind of, are they more the operator? Are they more the visionary? Do they have actually the understanding of how this industry operates today? And then what disruption and contrarian view that an idea that they can deploy inside of that market to make their rocket ship. Those are the things that I look for in the founders that I speak with.
Absolutely, very rightly said. And I think it's a very tough question for an angel investor to kind of answer as well. And I mean, I can just add to that a little, like the courage part is really important for me. How courageous is the founder? Because, going bold with the vision, it should not be just a statement, because it's out there, and it's great to be, contrary and have that thought. And I think the most important thing is the ability to hustle, because when you're just starting out, the continuous testing and iterating, as we all know, the great lean startup model today that exists. So how do you get traction? And that's the ability to hustle. So I think that's definitely important. And to uncover those traits for angel investors, it itself, is let alone giving the money, that is a big challenge. And that's where knowing the investors, what drives them. It's great to have angel investors from your potential industry where you think that they would be willing to hear you out and kind of concur to your big vision, or not. Just be, like you said, be flexible, be open-minded to listen to the feedback. And so I think one of the big question would be, what should a founder rather than what, I would rather say, when should a founder approach an angel investor? Because everybody knows today, okay, entrepreneur needs to look for funding as soon as possible. But should it be the day they have this brilliant idea, or should it be the day they think their pitch deck is ready, or what should be the right approach here?
Yeah, wow. So that's again, certainly not a one size fits all question kind of answer I'm going to give here, but I do think you need to have at least some sort of proof of concept to what it is you're trying to do. something that shows that, hey, what we're doing here, the traction is going to come. We have some sort of provable concept idea. You don't need to have customers. You don't need to have all the marketing figured out, all that stuff that I mean, helpful, sure, but at the same token, not totally necessary to approach an angel. But again, if you're looking for, it also depends on what you're looking for. Are you looking for an angel to come in and say, hey, I need you to help me operate this business? Then that's a little bit different than you coming in saying, hey, I just need, the funds because I've got these purchase orders sitting here and I can't fill them. And that's obviously, music to any angel's ears. But I think if you're able to prove the concept and have a real validated proof of concept, then you're going to be able to start having that conversation. And I know people kind of get fearful. If I'm not patented, could this person potentially kind of take my idea and go run with it, all that stuff? Absolutely. There's certainly risks involved with sharing something too early, but also at the same token, there's a lot to be rewarded for sharing early because you're going to get some feedback and some things you're not thinking about potentially that, you just don't know from the angel's perspective, that you say, okay, so during my next conversation, not just maybe with this person, but with the next investor, I'm going to make sure I've got, a talking point around that. And I've got some facts to back up that potential objection or barrier that prevented the last investment from coming in. So, again, I hate to be ambiguous at things, but it's a lot about feel, and it's a lot about what you're comfortable with, depending on the stage that you're in and what it is that you might need from this person, whether that is money or capital, whether that is time, whether that is their expertise, whether that is their team. Those are all things that should be taken into account before, making that approach.
Absolutely. And I think for early stage founders, it's like start building relationships. It's not necessary that you need to really get the investment, but if you're still like not ready with your product, start sharing, get the feedback, understand what would be relevant for that investor, because maybe they're not the right fit for you. And then also they could potentially like to see your journey. They might like to engage with you as an advisor. So take that advisory, take that help and build your product, build your vision, get the product market fit right. And once you have the traction, maybe, who knows, they might invest in you. So I think, or make the introductions as well. That's likely as well. No, I think that's awesome. So I'll just go on the other side of the spectrum. So I know you get pitched all the time. So what are the most common mistakes that the founders or the teams make when they're pitching the project here?
Yeah, I think the biggest thing is they come to you with just looking for a handout. They're just, hey, and the level of kind of, I've got the next big thing. I love the passion, I love the confidence in things, but I also the mistake is not being able to back that up and not being able to in any sort of quantifiable terms say, hey, I didn't just have this idea this morning, that I've really put some time, effort, and thought behind not just the idea now, but where it's going. And I think if you're not prepared to answer some hard questions about when am I going to see my return back on this? What does this look like in a year? And oftentimes a question I just ask after they give this big speech on this big vision and dream is, okay, so then what? So then what? Then you get all the way to there. Then what? What is that? Once if that's your destination and you get there, then what? Or is that it? We're all done? What would that be? So I think just prepare yourself to answer the hard questions and don't come to the table unless you have something. And for me, I'm just more quantifiable terms, provide some sort of quantifiable backing of this idea and a real vision and a plan and a strategy, not just, hey, if you get involved, this thing's going to go great. And and as confident as I am in my abilities, I know that it's just not the case. You need much more than just a person or someone that says, yes, this is going to be a good idea, and gives you some money and some seed money to go run it, because it's hard being a founder. I invited someone on this call today. I'm not sure if they were able to make it or not, who's the founder of a CBD company called Jaded CBD. And she is making all the right moves, impacting people's lives, the fulfillment of it. It's a tremendous product, and it's different. It's a disruptor. It's a women-owned CBD brand, and 99%. So when we began talking about this brand, it seemed like, wow, this is different. And not just this is different, but this is something that is an elevated CBD brand and has all the markings of the next thing that you're going to see in, when CBD is actually, officially legalized throughout the entire country, then you're going to see this thing everywhere. So things that when we start having those conversations, I think are really important. You have the backing, you have the understanding of the market. Just be prepared to answer the tough questions. And if you're not, people are going to see through that quickly, and they're going to just turn away. And you don't want to have that experience. So just be prepared to answer the tough questions and have a real plan.
Yeah. I think one of the toughest questions we had for DueDash was, to convince the investors, and the investors who invested, was that our go-to-market strategy was right. So we were early, and I think that and to convince you're the go-to-market guy, right? So that would have been a biggest red flag for you. So how do we articulate our go-to-market? And do you have a plan to articulate your business model around it? So I think that has been the biggest challenge for us. Though we had been engaging with some late stage VCs as well. So some of them liked that and some of them didn't. And those who liked, they came on board, and some of them who didn't, obviously they didn't. So I think that is definitely one of the biggest challenge for a very early stage startup. And that is the toughest question in my point of view, the go-to-market, your business model, and the whole growth thing. They kind of overlap, and there's no real answer to that. But to crack that and to articulate that is very, very important.
Yeah, just get out there and just start, with your product, just start selling it. I mean, people think they have to have it all figured out. And I'm sure everyone here has heard this quote before, but perfectionism is the death of progress. That is so true. Just get out there, start getting the market feedback, because that's going to help shape your go-to-market. You're never going to have a perfect go-to-market strategy on day one. That's never going to happen. So don't try for that. Just start. And then start taking that feedback from the market and incorporating it.
I like to touch upon very briefly, because you mentioned that obviously early stage founders don't like to share a lot because they have a fear that their idea would go out. So obviously, I mean, the founders out there, I mean, it's said pretty often, and I think you all know that people who are known as investors and they invest in startups, it's validated. So they get pitched all the time. So an average investor receives anywhere between 1 to 5 pitches a day. An angel investor here is what I'm talking to. So they would never, kind of sign an NDA, so to speak. It's really, but it's also it's not also true 100% that if there is really intrinsic value in your tech that you're building and you're able to articulate that very well, then they may sign it as well. So it depends, is there a intellectual property, and that is going to be your most valuable asset in the company. Right. That's where patents come in, and you have to show the value of that patent, like what is your moat and how long does it help you to stay competitive, because if that can be copied in 6 months, then also that's not what will really enable you in that direction as well. So I think that's something, how valuable is that IP, something that you need to kind of articulate there. So that's awesome. That's something I just thought I'll kind of touch upon. Absolutely. I think one of the key points for early stage founders is obviously they need to share that they are developing a big idea. They're working on that big idea. And sometimes companies try to communicate that they're creating this whole new thing. And sometimes it's also impossible to put a competitor benchmark because that product is still under development, and the product market fit is not there. So to know exactly who your competitor looks like, just to give that a feel to investor. What is your take on that?
So if I'm hearing the question correctly, Parul, it's how if you don't think you have the product market fit, where to go next?
Yeah, I mean, a lot of times when founders are building something, they're trying to create a whole new experience for their customers, and they might fit into the market somewhere, but it's not apples to apples comparison to another product as a competition out there most of the time.
Sure.
And they're probably still trying to while the product is still under development, there's iterative revisions which are going through for product itself, as pricing and everything. How do you kind of communicate where what is your competitive landscape looks like?
Yeah. So you love to hear the vision. You love to hear, the big, hey, we're going to put a dent in the universe style of pitch, when someone's talking to you, because, if they're not really excited about it, then, how am I going to get really excited about it? So if you could break down kind of that idea though, into the process of how you're going to get there, that is what excites the angel. So it's not just, hey, I've got this great idea, we're going to go for it. It's the breakdown of that. And when you're able to break that down, and you don't have to have it all figured out, but if you have just some sort of plot towards that goal or towards these milestones of where you're going to get to in the next 6 months, 12 months, 18 months. And again, things change, companies evolved, disruptions happen all the time. Some things totally out of your control. We all went through things with COVID and the pandemic, that nobody expected, but at the same, so no one's really saying you have to have it all figured out. But if you do have the breakdown of just, hey, we're going to get to this milestone by roughly this time, and this is how we're going to do it. But the big vision overall is, much larger than this. I think that level of realism with the idea of something that you're building is far bigger and far larger that is going to come on the back of that. That's everything. So I really respect that when I'm talking to different stage companies of, they're not just kind of drinking the Kool-Aid, for lack of a better phrase, but they're not just kind of in this because, hey, we're entrenched in this and we're trying to, and we're going to do this every day because we're just, we just believe it so much. That belief is important, but also really being able to understand the concrete steps of getting to where you need to go, even in just smaller chunks to different milestones, is everything. So I love the big vision. I love the big picture. Talk to me about that all the time. That's great. But the executable is totally different. I've known some amazing visionaries in my time. And then as soon as the company got to that executable point, the company fell by the wayside, and they actually had to bring someone else in to be the operator. So figure out kind of what you are in that bucket. There's nothing wrong with being one or the other, but being able to talk to different angels about the big vision and everything is amazing. It does excite, but being able to also have the milestones and the breakdown of how you're going to get there in some way, shape, or form, that's what makes it investable. That's what makes it believable on the angel side, to say, okay, they're not just talking because they have a great idea. They actually have a process on how they're going to get there and when.
We did keep the title of this event as Pitch Deck are boring. And I know I just thought I'll touch upon that very quickly because that was an interesting segue to that question. So, I mean, there's a lot of recommendation out there, 8 to 10 page kind of a pitch deck. Some say 7, some say 10. And if you are like going for a C to Series A, then the pitch deck can get longer. Now, pitch decks are not the reason for any founder to get investment. No. The primary goal is to get a foot in the door, try to get face-to-face meetings.
Yep.
And then there are a lot of, there are doorkeepers as well in the VC firms as well.
Yep.
So investor wants to learn more and speak to you. And that's the whole purpose of pitch decks. And also there are some advices out there how the pitch decks should look like, but because there are so many advices depending upon your business type and your business model and most of the startups have started to copy that. And I think a lot of it that you said, and I'll just try to summarize what I understood for the benefit of everybody, that pitch deck should deliver your story and vision and to excite the investor about your journey. And that's the reason why they will invest in you. And having conversation from a conversation standpoint, the angel investor would like to talk about your vision at first to allow this. But after you're able to win them emotionally, then the boring informational stuff will be discussed. And it never happens the other way. And the pitch deck, you need to kind of communicate those information before that emotional connect can really happen. So how do you motivate? And that's the dilemma. That's the informational stuff versus the emotional connect. So data means, data at a very early stage is really not there. And you need to show something for early stage as an early stage founder. So having said that, when an investor receives like 5 pitch decks a day and they're trying to go through that within 3 minutes, that means technically somewhere between 15 seconds to 20 seconds per slide. How do you kind of pique their interest? So that's where I think we said earlier on, the 5T model for DueDash kind of helps investors to gauge where the position of the startup is. And you can receive the business information as well as financial information, in the sense if the early stage founder does not have a lot of financial information, but they get most of the business information through the profile that the startup has. And of course, the fundraising assets, which is pitch deck and your executive summary, is an additional information that the investors can review within the data room that we have in the platform. Did I summarize that accurately, Matt?
Yeah, absolutely. So those 5 T's are really important. I would also say this: if you can have your pitch deck come from an angle of you, business owner, operator, and then also a prospectus from the angle of what you need from your angel or the VC that you're speaking with, that very clear on kind of the ask and what you feel and why you feel like this angel or this VC is uniquely positioned. Because it's not just about, I need an angel, let me go find someone to invest. The interview should be both ways. You should be looking at this and is this person right to be a fit, to be brought in to my organization and to what I'm trying to do here. So if you look at it from both angles, that's sort of how the pitch deck, I like to see it, is just very clear, clean cut. This is the business. This is how we're doing it. This is what we would also need from you. And then you can even throw a third dimension in there, which is, and this is how we want our business from the customer lens to be looked at. So from our market and the people that we're going to be serving, this is the brand that we're trying to build, or this is the platform that we're trying to build.
Great. So I'll start taking some of the audience questions now, Matt. Hopefully we've covered some ground here, but I think we have a very interesting founder here. I think he comes from a deep tech space, aerospace. And usually these kind of companies have a very high barrier of entry as they are investment heavy. So do you have any advice for someone like that?
Yes. So with tech companies in particular, you're right, there's a much higher barrier of entry to getting angels involved. I will say this: if the big metric that, and depending on the stage of this company, which I'm really unaware of at this point, but ARR is a big deal, that annual recurring revenue or the annual contract value, depending on kind of the model that you're going to market with. Most tech companies go to market with something along the lines of a subscription service that is locked in on a 1 to 3 to 5 year basis. Those metrics should be put up front if they're very positive for you. Now, if they're not very positive for you yet, that's going to be a question that any angels is going to ask from the technology perspective. So then the next thing on that is, okay, so say your pre-revenue, or say the ARR isn't great yet, whatever it might be, the impact to the business or the user that you're trying to make and why that's different. To start getting involved with things, I've met a few different founders, and one of which started doing things just on a local level, started going to business competitions at the local university, they weren't even enrolled at, and pitching their idea, their product, and was receiving grant funding this way, $10,000, $15,000, $20,000 from winning these kind of pitch competitions. And the way that they were doing it was by showing that, and again, they were pre-revenue, nothing coming in the door or anything like that. So they didn't have this ARR, this ACV, but what they had was a very clear idea of, hey, this is what it is today, and this is why we're going to be different. And this is why that's going to be not of value to us and our shareholders, but to the end user, which is what drives ultimately that shareholder value. So those are a couple of things from a tech perspective. The more you can get to that ACV ARR, of course, it gets easier. But if you're pre-revenue, what you're doing and how you're doing it and why it's different, start having those conversations, even on a local level. You'd be shocked who you can meet on a local level. Not everybody has to be, Elon Musk or whoever it might be on CNBC or any of them to come in and invest in your company. On a local level, start getting out there and talking about your idea and meeting with people. Again, universities have these sorts of pitch competitions all the time, and they don't even advertise them. I don't know why, but it's a great place to start. And you start getting funding that way too, and you start getting recognized, and you'd be shocked who attends those things.
I think you made a very good point there, because we had that experience last year. One of the startups which was doing something in material science, they actually pitched at one of our local events that we ran at DueDash during COVID times, and they were then picked up by a very reputed, I would like to name an institute, which actually gave them a pathway to pitch in the US. They sponsored their actual entire ticket at a very big event to the US.
Amazing.
And that led to a complete trip for them. They have this company. It was a material science and aerospace, actually, that kind of triggered me. And they have now set up a company there, and they have received like massive grants within Europe, as well as some venture funds directly in the US. So from where they were they've been struggling for the last 3 years, and going that route in less than a year was really an awesome journey for them. So I think that definitely underlines your point there.
Yeah, amazing.
Yeah. I would like to understand this question. I'm not sure if I understand this correctly, but let me just speak it loud and let's make sense out of it. And let's ask Praneeth to clarify that for us. So he's asking how important is it for founding members who are seeking funds in friends and family round and further rounds? And maybe he's the solo founder right now. So I think he's looking for whether the team is needed. And the second question is looking for validation of the product, vetting the business model instead of funds at that point. So I think he's looking for the prioritization. So I think that's how I understand his question. So Praneeth, it appears to me that you're a solo founder. You are at a very early stage at the moment. You don't have a team and you're still trying to validate your product. I would definitely say that look for a co-founder, try to get some people on board, because you'll need a team very quickly if you have to build a product. I don't know if you're a tech founder or a sales guy, but you'll definitely need two wheels to get your cart going, and then build the engine on the way. And then once you have your business model sorted, you have some validation, some traction, then definitely start talking to angel investors. I'm not saying don't talk to them now. You can start talking to them now. Maybe they will be able to even make introductions for you, because they meet a lot of other team, other founders. Maybe for all you know, they might be able to even introduce you to some co-founders. That may very well happen. Well, sorry, I don't know who was that. Then there's another question: how can you get customers? Well, I don't know the business, Thomas, that you are in. It will be totally dependent upon the business that you have, and you will have to obviously know your market. So that's one of the dimensions that we measure, which is your TAM. You need to know your market. You need to define your customer archetype, and based on that, you will need to start doing interviews. So we always recommend founders, and that's one of the most important exercise that any founder can do for their business is customer development. And that does not necessarily mean it comes after you build a product. It should start from the day you have this brilliant idea. Start
Absolutely.
talking to people. You need to see if how this idea resonates with them. How does your solution help solve their problem? How much would they be willing to pay for that product or a service? what more can you do to make it more valuable? What will happen if your product goes out from the market? And I'm not saying something new here, right? I'm just
Yep.
stating the stated, which is out there. So you just have to go out there, start talking to people, talk to 100 people, I would say, start seeing that. But before you get to 100, have deep interviews with at least 5 to 7 people and see, are you able to even communicate your vision or the solution to them properly? Is it a band-aid? Is it really a Kool-Aid that Matt said earlier? Is it really a pain that you are solving for? You're really relieving them with the pain.
Yeah.
Okay, so one of the questions that Abraham is asking is, how is the investors' sentiment post-COVID? Has the approach to startup investment changed anyway from an angel investor standpoint? I would like you to address that.
Yeah, certainly has. It's definitely changed in a sense that the world has changed. So kind of the services and products needed now are different than what was needed just even 2 years ago. So, I can think on just a very local level. I've seen more dry cleaners close everywhere I drive. I feel like there's another dry cleaner with pulling their sign down and putting a lease sign up, because the world has changed. Not everyone is going into the office all the time anymore, and therefore that a big part of that business was, and nobody really even understood at that time, what was the 9 to 5 worker that had to go into that corporate environment. So the appetite, I think, for investment has not changed. If anything, it's probably grown, given the fact that there's all these great new companies that are being built today. But I do think the shift of, okay, the world has changed post-COVID, post-pandemic, it's changed in a lot of ways. What are those ways, and how do I capitalize investment into some of now these kind of new ways that are now going to be what we do, and they're not going back. We're not going backwards. So appetite hasn't changed, but certainly the type of companies and what you think about now from different perspectives has absolutely changed.
Yeah. And I think it's also important to understand the way world has changed. It has led to new business ideas. It always happens. Any crisis creates problem and brings new opportunities. So we're definitely seeing many different types of businesses which are gaining quick traction, and obviously investments and success stories versus the others.
Mm-hmm.
And some of the dynamic was already there. And I think a lot of things that I'm seeing is also dispersion of investments. The people, because they were working pretty much remotely during this time, people are becoming more open to receiving. Some of them who had exposure for, talking more online or being approached online, and probably getting some dispersion in their portfolio as well, getting more diversity to their portfolio as well. So I think that opportunity has definitely opened up, which also means competition on the other end. So everything has two sides of the coin.
Mm-hmm.
Okay, so I'll move on to the next question, which is from Cyril, which is why angel investors are not always happy with valuation for an early stage startup. It's a double-edged sword,
Yeah.
but I'll let you answer that first.
Yeah, I mean, valuation, everybody, it's human nature. It's, you want the most for your capital, just like anybody else. So a valuation or the valuation of a company, being able to prove that and understand that, everyone's going to have a different metric for it. Some people it's EBITDA, some people it's earnings, some people it's, they take customer acquisition costs into consideration. Others just see the vision, they want to get on board. So regardless, I think, of the angel you're going to speak to, they're in the business of making their capital work for them. So they're going to, when the valuation discussion comes up, if you have your metrics and you have the backing of that, it's a really easy conversation. If you're still sort of pre-revenue and you might be new to even entrepreneurship and things of that nature, you might have to bend more than you'd want. But I'll say this again, it should kind of be looked at both ways. If this angel is, maybe being hard on you in valuation, what is, okay, so you're going to maybe provide me with less capital or less liquidity right now, but are you going to provide me with something else? Is there something else there that's an intangible that you're going to provide me? Business advisory, you have a team of people that can help, with, SEO, or you have, a team of people that can help with my accounting, that's a nightmare, et cetera. So I would focus less on maybe the equity you have to give up to get this angel involved, but to really also, again, put the shoe on the other foot and think for yourself, all right, if I am going to give this up, it's not just about, the money that's going to then infuse the business. It's something more that this angel can help provide to me. So valuation, it's depending on the business, everyone, it's 3X, it's 1X, it's 7X, it's 10X, business and industry, it's all over the place. But I do think if you have your numbers, great. If you're pre-revenue, there's going to be a lot more subjectivity to it and more discussion. And then your track record is going to come into play, I think, more often than not of, have you done this before? Is this something you've been successful at? Growing a company, starting a company, and ultimately getting into a stage where it's returning capital for your investors.
And that's something that Matt also mentioned. Make it a two-way conversation. You can ask investors what is important for them. Mm-hmm. What is where do they kind of hold more value? What kind of KPIs are they looking for, so that you can become interesting, so that you can showcase that to them. You can start talking with them at the idea stage, keep getting their feedback, keep updating them. That also builds confidence, because they know that you are at it. You're not going to just, run away with it. You're not going to get demotivated the next day. And you have that grit, and you're going to persevere building that idea for a very early stage founder. I think that's one of the most common challenge. And they also if you build that confidence, if you are talking to other investors, you can also share that what the other investors are saying, and then you can start building the trust and credibility for yourself, and potentially you can get their investment sooner than what you anticipated in the first place. Okay, the next question is it required to go through still the norms of pitching, or would it be just enough to woo the investors? I think it came from the fact that when we were talking about the vision and stuff like that, so I think that's where it happened. But I think what we were talking about still was you'll have to get to wooing part, because they need to find you credible. Your pitch deck is like a memo or a business document, which kind of helps them understand where you are, what are you going to do with it, what are your thought processes around building this business. And if they like that enough, it's good enough for them to convince, they'll give you a meeting. And that's when you go about wooing them. So I guess both are needed. Your take, Matt?
No, absolutely, totally agree with you. And again, not all angels are the same. And certainly they all have their investment thesis, but yes, I completely agree with you, Parul. The kind of the wooing part, that pitch deck, that's just to kind of open the door, just to get you in the room and get the conversation moving in a direction. But you be pretty certain that the pitch deck is not going to be what gets you the investment. It might just get you the meeting, but it's not going to get you the investment.
So we have next question from Michael, who is asking, from the perspective of timing and potential sense of value and urgency, how do you assess the weight of the information, the multiples from industry analysts versus your own research via different validation interviews and Googling the information?
Yeah, so if I'm understanding the question correctly, it's, if you've got to make a quicker decision on something, do you take the multiple that basically, you've been, hearing about should be the correct multiple for a business in this industry, or do you kind of rely on another metric that helps you? So, at that point, timing is tough for me. I really do not like to be put into and this is just me from my perspective, get backed into a corner. There's been a couple times that's happened to me. Actually, I should only say there's been one time that's happened to me and it did not work out well. And I thought to myself, okay, that was my mistake. I won't let that happen again. So sometimes, although, timing could be very sensitive and urgent, fair, but you still, if you try and put an ultimatum to someone on a timing or at a particular period of time, the pitch better be absolutely rock solid, unbelievable, you know, and the financials and everything to back it up better be right there with it. So that would be probably the only circumstance in which I would ever make a time-based decision in something that I felt like was a very short, condensed time frame. So I like to do my research. I like to talk to people. I like to talk to the team a lot. You know, first impressions for people oftentimes really good, but then you start getting to know a team and people more and more, things come up, right? There's always the honeymoon stage, and then, you know, things sort of get a little bit realer, et cetera. So I generally stay away from things that I feel like I'm backed into a corner. I have to make a time sensitive decision. Unless, again, just everything is really laid out, very clean, very understandable that, hey, just throwing some kind of gasoline on the fire here and this thing's off and running.
Add to that, basically, for timing for any business is, you know, is it a growing industry, first of all, or what are the macro and the microeconomic factors which are driving this industry or potentially the product or the service you want to launch? How are the consumer behaviors changing? I mean, the great example of Airbnb and Uber. So the market of taxi existed from 1929. Hotel industry existed from even before. So I think the industries existed and they were growing at a pace, but then it was a business model disruption. So what is the disruption element that you are getting? And then talking to people, validating the idea, getting the pricing. So that kind of layer kind of goes in there. And then that's how you need to see when is the timing right. So then the technological advances, people were using smartphones, they were able to use the app, and you could bring the moving components together and make it easier and better. So I think timing is a very hard one. And there are a lot of things that kind of come together. We can have a separate discussion, Michael. You can reach out to me and I'll be able to help you to decompose that for you. Okay, then we have a next question. How to know which angel/seed investors are interested in one particular sector of startups?
DueDash.
Yay! That's it. That's what the answer I was looking for. Absolutely. So
yeah,
absolutely.
DueDash.
So
exactly what I thought of.
Yeah. So we definitely have, we're still trying to onboard more investors more and more. And there has been a demand also from founders to kind of get a database access, so that we are debating right now whether we should kind of have a database access of our investors instead of onboarding. So we have 700 plus investors already. We are continuously getting them on the platform. And all of these investors who are there, they invest in really idea stage to seed stage startups. So please join DueDash today for all the startup founders looking for investors. We also help you getting into closed Zoom room conversations with them. So Michael and Marcus will be happy to assist you more on those details. And we are looking to get as many investors onboarded, and we are connected to several VC funds as well as angel networks. So even if you see one profile, behind that could be thousands of investors there who would be willing to consider your startup if it's the right fit. So we have a last question here. Can a round be raised from an XYZ fund who has no connections in that sector if the founder already has a well-knit network in the market? I think he answered the question himself, I guess.
Yeah, certainly. Certainly can. It just depends. Like as I mentioned, I came from tech, so that's kind of where I started with my investments, but I've certainly expanded that portfolio as I've gotten to know people in different industries. So yeah, it's certainly possible.
Yeah, absolutely. So I think that's awesome. I think you can definitely raise investments. It depends on the fund, what stage do they invest in a startup, and sometimes funds do have a thesis. They want to invest in specific specific sector only, but there could be different dimensions. Sometimes they do exceptions depending upon if they have a partner fund or they know another fund or another investor who would potentially make an introduction, and they say that we like this team, we like what they are building, and it's really awesome, and they have a right fit in terms of technology, or their portfolio company would be able to leverage it somehow. They may be able to find a fitment somehow, but then you need to have really those strong ties, whichever way you might have or you were referring that to. So that may happen. It happens. I'm not saying that's the norm, but yeah, you need to see how tight those connections are. That's been awesome. Thank you so much, Matt, for giving the time today to us. And I think it's been really insightful. I think founders really enjoyed the conversation that we had today. And looking forward, I think most of the founders will reach out to you on DueDash themselves.
Right.
And
no, I appreciate the time today.
Yeah, and the founders can definitely set up their profile on the platform. And thank you once again. Any last words of advice to the founders who joined the session today, Matt?
Just give it, I mean, what you're doing is amazing. It's admirable. I love the idea of entrepreneurship and seeing it in action. There's going to be really tough times. There's no doubt about that. So, you know, be mindful of that, but fall in love with the process. Don't focus so much on the destination. Fall in love with the process, the day-to-day, everything that you're doing. And, you know, best of luck, and please reach out to me if you think you want to talk further. I think my contact information is being shared now, but please reach out. And I really did enjoy the conversation today, and good luck to you all.
Thank you, Matt. Michael, I'll give you the last word as well, so that you can just wrap it up. Thank you.
Yeah, thanks from both of you. I think it was a great session. For those of you who want to revisit this, we also will have recording on our education platform, probably tomorrow or after day tomorrow. Have a look into the chat. As I said, I shared you that link. So we have still that special Easter offer. I think for all of you who really want to take your fundraising, investor relations forward, take that up. And as well, I already saw a lot of you people join DueDash during the session. I think I counted more than 10 people already who just joined during the session. So amazing stuff. Connect with Matt. And for our next events, we have in 2 weeks the session on our Startup Lounge event. That's going to come up on what problem is your business solving. So it's going to be interesting. And we will have another session. We're going to announce the details very soon, but likely in 1 month's time. So that will also come up very soon as well. So looking forward to have you for our next sessions and on DueDash. And for all of you, have a good day, midday, evening, whatever is your time zone right now.
Thank you all.
Thank you, guys. Thank you very much.